The first finance ministers' meeting of the Irish presidency, and another push to take some of the weight off the borrowing costs of Ireland and fellow bailout country Portugal. And with two different funds supplying the money, it needed two different meetings, one last night, one today, to make the request. The idea is simply to pay back some bailout loans over a longer period. When the first loans were drawn down in 2011, they were for relatively short periods of 5 and 7 years. But last year's loans were much longer, 20 and 30 years, more like mortgages. Now the government wants to try and stretch the term of the earlier loans so they won't have to be refinanced for a long time. That should make financing the debt easier over the rest of this decade, when the public finances are particularly stressed. The idea has been brewing for several months.
This was first mooted by Jean-Claude Juncker, I believe in this room in December. And after some discussion with the Portuguese finance minister, Vítor Gaspar, we decided to wait for a more opportune time. And that opportunity came yesterday. He took the initiative. He was supported by Ireland, and that was in respect of the EFSF fund.
At this stage, it's too early to say what would be the exact financial impact for Ireland and Portugal. But I want to reiterate that it is indeed in the very fundamental interest of not only the two countries, but of the whole European Union, that Ireland and Portugal will successfully return to market funding.
Meanwhile, the government is still pushing for a deal to make the cost of the Anglo-Irish promissory note easier to bear.
Time is running out on the period of time that we have to conclude those discussions, and yesterday's decision is something that's very welcome.
There should be a decision on the European bailout loans extension by March, the same month that the next promissory note payment is due. Sean Whelan, RTE News, Brussels.
Opposition parties have given a mixed reaction to today's announcement. Some acknowledged it may save the taxpayer money, but all said the decision to extend the term of the loans didn't go far enough.
Opposition TDs seem distinctly underwhelmed by the deal. Fianna Fáil said the decision to extend the terms of the loans was taken last year and Ireland was still not getting as good a deal as other countries.
Just last November, Greece managed to secure a deferral of interest of up to 10 years, and that's something that would be of immediate cash benefit for Ireland if that were actually delivered, and that's something that we would now call on the government to seek to negotiate with our European partners.
One TD was not sure there was any value to the agreement.
It's unclear to me how this is going to save us money. The first amount owed paid back on the EFSF is in 2016. So in order for us to save any money, it would mean that we'd still have to be borrowing at very high rates 3.5 years from now. If we're back to normal market rates for a country like Ireland 3.5 years from now, which I hope we are, then this deal won't save us a penny at all.